Well, the RBI has hiked rates, and let's try and understand firstly the context of this. One is that there has been excess liquidity within the system, largely due to COVID. COVID pushed central banks globally to maintain more accommodative stances, and the RBI was no different on that front. Secondly, there has been pressure of late, especially since the month of February, on the manner in which global geopolitical conditions are pushing prices even higher, especially primary commodity prices have gone up quite sharply, as well as how global central banks are reacting to the overall situation on inflation. Global central banks are hiking rates, and RBI cannot hold back for too long. The other impact, of course, is from the agri side and commodity side. Agri prices as well as commodity prices have been going higher consistently, even within the Indian context. The governor, in fact, even highlighted that wheat prices have been going up despite no supply constraints whatsoever, largely due to global factors. And we did see CPI inflation going higher. In fact, last month CPI inflation came in at 6.9%. So already well beyond the RBI tolerance limit. So what the RBI has done is they've called for an emergency off-cycle MPC meeting, and they've emphasized that inflation needs to be contained. They've hence hiked repo rates by 40 basis points, up from 4% to 4.4%, and they've called for liquidity withdrawal, hiking the CRR, which is the cash reserve ratio, which financial institutions need to keep with the RBI, at 4.5% versus 4% earlier. So they've hiked that by 50 basis points. The impact of this has been quite immediate and quite accentuated already. Indian bond yields have risen up. They've gone up from as they were around the 7.1 to 7.2% mark, and they've gone up to 7.4%. That's the 10-year India bond yield at the moment. And of course, this will also mean that bank rates start going higher, which means that loan rates will start increasing. Loan rates, in fact, will increase immediately as the rate hike comes through, because that's largely how it's translated, as well as bank account deposit rates will start going up. There will also be a liquidity withdrawal which will happen from the system, which will also in some form impact growth. Of course, loan rates going higher will also impact growth. Liquidity withdrawal will also impact growth. So it will be a double whammy there. And CRR has also been increased sharply, which means that banks will have to park far more funds with the RBI, which will also be a measure of liquidity withdrawal. What do we make of it? Well, it's the start of the hiking cycle. The RBI will be withdrawing liquidity as well as raising rates, and the focus will be on taming inflation. The RBI seems more confident on growth at the moment as well as recovery. The accommodative stance has continued, but that will start tapering off gradually, and the pace of policy normalization seems to be faster than what was earlier anticipated.